here's the big market call from none other than Madhusudan Kela, telling us about what he's making of the markets right now, what with the small and mid caps, what the year ahead is going to look like, and of course his expectation from the budget as well.
I think broad indices, in my opinion, Nikunj, will be range bound. I don't know the range, but I don't see really it crossing what we had, like 26,500 on the upside. And maybe on the downside, you can assume, in some really bad news happens, so there could be the 5-7% more downside also from here. So Nifty may actually fall far less than what the broader market will do. And the pain real is in the broader market. And this is why I'm saying that we'll have to be really sharp to make money in this year. And we can't afford to overpay for things which we like also. Small and mid caps, which are cheap, where the risk reward asymmetry is in your favor. And some of these companies have not done well for even last 1 year or 2 years. Like some of the, for instance, if you look at the NBFC space, it has not done well in the last 12-18 months. So you could find even mid-cap and small-cap companies on that universe, which are very attractively priced. So all I'm saying is that let's not generalize the entire mid-cap and small-cap as one segment. There will be a lot of value buys in mid-cap and small-cap. And even after this fall, there will be a lot of sales also at the same time in this category. The trade may shift from that overvalued stocks to deep value. And that is what we are beginning to see. That, some of the, like you see, for instance, in the last 1 month fall, financial stocks have fallen the least, or some of them have even gained, even in this kind of market. Select private sector banks, select NBFC companies, select financials have gained. On the other hand, some of the capital market stocks, which we did very, very well in the last 3-4 years, they have corrected in the last 1 month. So within financial, you can see the contraction which is happening. So I think the trade clearly is shifting more towards value, and investors maybe in this year will find it very difficult to make money in overvalued companies, which was maybe the case for last 2.5, 3 years. How can the India story be over just by the 10-15% market correction? That is not what makes India. What makes India is really the long-term sustainable growth which we have in this country, our positioning in the global market, where this is one of the most attractive destination from a FDI perspective also, and even from a long-term investment perspective. Right? We are, I don't know of many countries which have a promise to grow at 6.5-7% for the next 5 to 10 years. So that is what makes us attractive, and that attractiveness, in my opinion, has not gone away just because we have seen some correction in the stock market.